Yes, sir. Here we are once again, my fellow simpletons and degenerates, back at it. It is I, the Savage of Wall Street, just touching base with the gang and wanted to see what it is. I hope you guys are doing great. I hope everyone's having a great time. I hope everyone made money today and took advantage of the opportunities that the market is bringing us. So, what do we have here? Let's see here. GME seems to be squeezing. I like it. I told you guys I'm not doing absolutely anything with GME right now because I'm very curious to see how it will behave in the coming up weeks, running up to October the 3rd, when it's they actually have to basically is the date for them to let people know who basically owns GME and who is going to be able to get those warrants that I believe are going to get dispersed October the 7th. I could be mistaken, but if I am, I know somebody in the chat will let me know. Um, Good evening, my fellow simpletons and degenerates. I hope y'all are doing well. Um, Nice day today, exciting day um, in the markets. I made a nice little chunk of change, although I was not 100% um, able to just be looking at my portfolios and have my laptop here, my other laptop here, my phone here, and my wife's phone here, and like I'm kind of trading all over the place, and I have some other screens. Um, my little one had to go to the hospital. We had to, get something done with his thumb because he's got this little extra growth of skin that is beginning to affect him when he grips things. And after now that he's in first grade, he's riding a lot, so it begins to bother him, and so it's gonna come off. However, the doctors don't want to just go and cut it because they don't know if there's any type of artery there or if there's a little something. They don't know, so they wanted to have an ultrasound. We had to get that done, and so I still was trading on our way there, right? Uh, when I was waiting for him to get this procedure done as well, I was waiting and stuff, and I was trying to trade, but the internet was terrible, absolutely terrible where we were, and like I did a snafu today too because I was trying to do all these things at once before getting out of here, like at 7:30 a.m. So I really had like an hour to trade, get ready, get my kid ready, drink coffee, eat something. It was just I ended up instead of selling my puts that I bought on AAOI, which I was okay taking a $10 loss on. I ended up buying another one, and then I'm like and so anyways, and then I guess somewhere in the whole chaotic scene of me trying to get out of here and running out the door with my kid, I was like, I'm trying to close it again. So this time it was two puts, and I tried to close them, and I think I fucking did it again. I bought two more instead of selling the close two. So I had four, and then AAOI is going up, and and I just can't. I called Robin Hood, and I was like, guys, I'm trying to do this. What the fuck is going on? What's going on? And they look at my portfolio. They're like, oh my, what's going on? And I was like, well, and they're trying to tell me, well, what you were trying to do is, I was like, dude, I've done this before. I promise you, I know I fucked up. Help me out here. Like, I could have sworn I did it the right way, but I may have not. And so, anyways, I'm not trying to do it again. So, like, can you do it for me? He's like, let's just go by, step by step and do it. We closed it. I lost $100. But anyways, we're out of that. I guess the moral of the story is don't fucking trade when you have so much going on and like you have to get out of the house within 45 minutes and it's not good because you're gonna lose money. At least not trying to close puts, right? How's that? If you're selling covered calls and you're selling cash your puts, different ball game because you're basically going at the stink at that point, right? And things were good today. Anyways, what do we got here, my fellow simpletons and degenerates? Good evening. I hope everyone made money today. I know everyone made money today because the Savage 20, some of them were down. We had a mixed bag, but a lot of them that were ripping last week, 25%, 30%, they took a nice little cushion today. Some of them offered some stock. They took advantage of the price action. Some companies decided to make money, so they ended up doing a little price off, offering, right? So they did some stock offerings. That's what happens. This is healthy, right? So the stocks take a nice little dip. But if you sold cover calls, you were happy. You were grinning from cheek to cheek because you knew this is how the game is played. This is why we do what we do. And instead of just grabbing ourselves by the head and saying, no, my portfolio is down so much, you're saying, shit, my cover calls are looking nice. I'm up 20, 30% on my cover calls. They don't expire until November. I think I'm going to close. You just made 30% in a day. What? Remember, bulls make money, bears make money, pigs get slaughtered, my friends. So, sometimes you may just, end up leaving a little money on the table, so to speak, right? And you may, close out too quickly. Nobody knows what the market is going to do, but nobody's ever going to regret taking 30, 40% profit in a day, guys. I'll tell you that right now. And more often than not, you're going to be on the positive side of history. Who do we have here tonight? Good evening, Tom Kaufman is saying hello, Savage. Charlie C2's in the house. Beach Boy's here from Israel, my friends. Damn it, that's right. We're in the Middle East. I love it. Moneymaker Juan is in the house. Hector is in the house. Jude K is in the house. He's saying hi, Savage. Colton, what it is, my friend. Yo, brother. Charlie C2 is in the house saying new all-time highs in the account again today. I'm up 52% year to date, outdoing and outperforming any of those dumbasses on Wall Street that are trying to charge people, 2-3% for their services in a $1 million account. That's $20,000-$30,000 that they're charging people to do the same thing these guys are doing and outperforming them at that. All right. Charles Schwab, I think, or the 401k. I don't know if it was Charles Schwab. I'm trying to think here. Goldman Sachs. Goldman Sachs holds a portion of my wife's 401k, and she was basically seeing that she's been making 20% returns on her 401k. Not shabby, not too shabby. But I said, you know what? A couple of years ago, I told her, let me take some money off of that. Let's see what we can do. And I'm kicking their butts. And now she took out another $100,000. We're waiting for that to go through. And going to go in and play some more, and I think I am outperforming, Goldman Sachs, guys. And if I'm outperforming Goldman Sachs, I know you guys are outperforming Goldman Sachs. All right. And that's good to see. So Charlie C2, that's great to hear. Good job, my friend. Kent's mom is in the house saying, hey, Savage, how's your son? Or was it your daughter that was going to have a procedure today? I hope all went well. Well, so he did. It's my eldest. He's 6. And little growth in his thumb, right? He's got like I don't know what it looks like a birthmark, but it could not be. It's just like a growth, right? And it's beginning to affect him and his dexterity. So we just decided it's gonna come off, and because it hurts him, and we told the doctor, and the insurance, because it's gonna be a plastic surgery type of thing, right? But because it affects him and it is hurting him, it's now a medical thing, right? In which case, we have to go through like all these different procedures and levels of going and taking it up the ladder, right? Bureaucratic stuff, because we can't just go and get that taken out. They have to go through, somebody has to go and tell the an expert, right? They want to get somebody that's like an expert. It can't be just any plastic surgeon. It's got to be a pediatric, plastic surgeon, and you have to take different tests to make sure that there is no like arteries or there's no like bone exposed, anything. All these types of they want to be as safe as possible, right? And so we had to go and he had to get an ultrasound to make sure, everything is cool there. So when they do cut it, and this is going to happen on Friday, um, he's going to have that procedure. When they do go on Friday, the doctor knows exactly how he's going to cut, where it's safe to cut, and how he's going to go and perform that incision, and where he's going to put the little skin graft, all that stuff. Anyway, so thank you for asking though, Ken's mom. He's doing well. He's in good spirits. I took him out, and he got some treats. He hasn't had chips for a while, so he begged me for a little bag of ranch Doritos. It's a small bag, and I was like, "Go ahead and have one." He was so happy. And then we ended up going for a walk. Like a nice dad and son walk. He didn't want to drive. He wanted to take like a 45-minute walk with me. And I thought that was really cool, man. So I had a good day with my son, and hopefully things are well. I think the doctor's going to do whatever they have to do on Friday. And then he should be good in a couple of weeks, hopefully. Um, Charlie C2 saying, I love this game. I agree with you, my friend. Absolutely. Dude saying, let's go. Good day in the markets to be sure. Very happy. Rolled some puts, rolled some covered calls just in time for the pop. Ricardo Canales is in the house saying, Savage. Dude is saying, hope you have good news for you and your family. Sorry to hear about the travel stress. Be gone. It happens, brother. It's just life. We got to roll with the punches, man, and it's just I'll tell you that right now that having some type of financial freedom and not being worried about missing work or worried about me not being able to afford his procedure, us being lucky enough that we have some good insurance, and him being that we are in a city where some of the best surgeons in the world are, it kind of takes a lot of stress away. But but yeah, man, I appreciate that. It's just it kind of sucks because you don't want your kid to go through pain, right? But it is what it is, man. And I'm confident that he's gonna do fine. It's just knowing that the person that's gonna treat him is like an expert in his field and one of the top people in his field. It makes you feel at ease. And all these tests and procedures that have to get done, it's totally cool. Um, Moneymaker One is saying, haha, I have done that when trying to buy calls, accidentally sold calls. You know what? It happens, man. Well, this was a put. But yeah, what's aggravating is the fact that I just it was not a cheap put. It was like 225 bucks, $275. And I tried to sell it at 260, right? So I bought it at 275 and tried to sell it at 265. And so I was taking a $10 loss. And the thing is that because it was more puts, and because the time today, as time progresses, the stock was recovering. So those puts are less valuable. So it's just like, instead of losing $10, I lost 100 because instead of one put, it was four, and it was at a time when the stock had recovered. So it happens, man. It's a pain in the ass, but you know what? It's a lesson learned, right? Lesson learned. It's happened before, and so the guy that was, from Robinhood on the phone, they got to me fairly quickly. I'll tell you that. My portfolio is not that small either. So I think, they want to keep you happy, right? It's not like millions and millions of dollars either, but they want to keep people happy. And I've always had a good experience with their customer service. So I like Robinhood. And so, they were on the phone with me really quickly. The guy was able to then just go in, and he said, do I have your permission to go and do this for you? And I was just like, absolutely. He's like, I'm going to record you. Is that okay? I was like, yeah, sure. And then he's like, so you want to basically, and then he went through the top, with what needed to happen was going to happen step by step. And we did it. And then I was said, thank you very much. And then I was able to focus on then my son, because at this time we were about to like go into the registration area. So it's all good, man. It's Ryan is saying, Savage, hopefully everybody's making that dinero. Close some positions for 5 to 10% for a month profit. Smaller account, but small steps towards becoming a millionaire. Is that's the key, my friend. How does a man walk around the world? One step at a time. You know what I'm saying? You start walking around the world. Your trip around the world starts with that first step. So There is no small account. As long as you're in the game and you open up an account and you put $1 in, you are in the game, my friend. And it's all a matter of time, and it's all a matter of perspective, and then you have to have conviction. Um, for example, today, GameStop, it touched 27 and change, right? Today was let's see. Um, today the highest was 27.34. Now Here's the thing. I told you guys this is going to happen. GameStop, it had their earnings. It got hit, went to 22, 23, closed at 23. Then it closed at 24. Then it closes at 25. Then it closes at 26. You see what's happening, right? It's closing and the lowers get higher. So that's what's happening right now. The warrants issue is at hand, and they're really trying to keep and stifle the stock as cheap as possible, because they don't want the warrants to become a lot more expensive than the stock, but it just may happen. Because there's going to be a lot less warrants, but these warrants cannot be synthetically made. You can't just make them appear like you did the stock. You can't just call your boy Kenny and be like, "Hey, can we just make it so that because of the covered calls, now we're going to have to say that we own the stock, but we really don't own it, but we have the rights to it and all this shit." And so, yeah, you can't do that. Not with the warrants. Now with the warrants, you're going to have to say this is how many shares this person has. So they have, for every 10 shares, they're going to get a warrant, and this is what's in existence. So I'm very curious to see what's going to happen. So I have not written any cover calls against my GME. I'm holding it. I'm a bag holder right now, my friends. So and I think that's really cool. I'm very curious to see what happens in October with GME. But yeah, no, I just it's the one that I didn't it's the one that I didn't do anything on today. QUBT raised some funds, and so I told you guys, QUBT, it went up. Let's see here, in the last week, as of Friday, it was up like 42%. Okay, that was your cue to it when it was at $23-24 a share, to sell some 30s out to January, because it was that hot, and you could have easily brought $4 or $5 a share. Right now, you could have bought it back today for, let's see what those 30s are going for today at market closing. Those January calls, 30s, 273. So you sold them for 450s, $5-6 a share, and today you bought back for like $3. You made 50% in one day, one trading day, because yeah, we had a weekend, but that's not a trading day. So if you sold $30 covered calls expiring January 2026, you bring $5-6 a share. Today you bought back for 250. 188 was the lowest. If you bought a $2, you made 60% in a fucking day, a trading day. That's nuts. But that's why we sell covered calls. Whenever the stocks rip, 15-20%, that's your cue, man. That's beautiful. We live for days like that. And you take money off the table. Let's see here. Felix Alderete is saying, "Hey, bro, from Texas. What up, brother? How you doing? Nice to see you. Thank you for tuning in. I am from San Francisco, California. Not a Texan, Dallas, Texas, or Dallas Cowboys fan, actually. But we had some really good battles in the past. The Cowboys and the Niners had some duels back in the 90s, and I remember being a kid and just, man, I remember the winner of the NFC West, right, was usually the winner of the Super Bowl. So the Super Bowl was played either at Candlestick Park or Dallas, the stadium in Dallas. I don't know what it's called now, the Dallas Stadium, right? So JJ saying, "Savage, go Birds!" Oh, he's a Birds fan, so I know what you're talking about. It's probably the Falcons. Or is it the Sea Chickens or the Cardinals? I know which one it is, but I'm not gonna say it. Ravens. I know it's the Eagles, but there's so many birds. Yeah, I mean, like, it doesn't matter, man. You guys are just, there's only one 49ers. One 49ers. Whenever it says I'm a Niner, they know exactly what they mean. When you say go Birds, I don't know who you mean, my friend. I don't know who you mean. Go Niners. 3-0, baby. 3-0. Strike. All right, so QUBT, great opportunity today. Look, cash secure puts today. QUBT went down. I think it was down like 15%, 20% at a time. Today was a beautiful day for cash secure puts, and your boy Savage went in and sold cash secure puts for 460. I got 460 for selling some $20, some $19 puts expiring January, and I brought in 460. You understand that? Well over 25%. Worst case scenario, they put these shares on my account and I got paid 460 to buy QUBT. What is wrong with that? What is wrong with that? You tell me what is wrong with that. I'm getting paid to buy a stock that I want. I had written $14 cash secure puts when the stock was down in 15 land, and I got a lot of money. And then it ran up, and I bought back for like 90%, 80% profit. And now I'm doing it again. And now I have shares. Right. So I sold some covered calls, made money. Um, QSI, for those that have been following me for the last few months, um, Quantum SI, QSI. I was telling you guys when it was $1 a share, $1.10. I was like, guys, this little stock seems like it's primed to just take off because it's at a inflection point, right? You look at the DMAs, you look at the RSI, Bollinger Bands, and you're like, you know what? It's just there. It's about to make a move, and it's probably not going to be to the downside because there's just too many positives going on right now, and because of the rate cuts, money's going to become cheaper. um so the Russell 2000 stocks are going to fly in the next year as the rate cuts begin to become 1, 2, 3, 4, and 5. As you start adding more and more, money becomes cheaper, for small companies to buy, and they can put that back you know towards their company, right? The companies put the money back into their growth, and so they are worth more. The companies become more valuable, they get bigger. You can't grow by getting smaller. That's just not how it happens. So whenever I see a company that says our guidance is lower, we're looking to trim, we're going to let go of 10%, 20% of our staff because we're trying to restructure and become a lot leaner and meaner, and it's like, dude, you can't grow by getting smaller. That's not the way it works. So that's why whenever a company says that, or they start buying their own stock, that's a red flags. And I start selling, covered calls up to wazoo, or like, I just want to get taken out and bring in cash that way. Anyway, QSI is up today, 13.67%. It's up 1.5% after hours. It is $1.73 now a share. It was $1.10 when I was telling you knuckleheads about it, and now it's 173. All right. Same thing with Smart Rent. SMRT is the ticker. This is not financial advice. This is just me telling you, every stock that I talk about, I'm trading, and I am basically letting you know how I'm investing and what I'm investing in the interest of full disclosure. Every stock that I am talking about, I trade and I am bullish on, so I'm going to have some type of positive bias, right? So go and do your own due diligence and see, if this is the type of company that you are looking at. So when it comes to investing, right, and then you're positive putting your money in, and another thing is that I don't just go and buy shares, right? I don't do that at market price. I go through cash secure puts, and that's how I do that. I look at days like today with uh with uh with QUBT, right? And days like today when it's bloody, that's when I go in, I sell some cash secure puts, I get a lot of premium. I try to go close to the money, right? Sometimes one little strike below where the money is, and so that I safeguard myself from another, weak hit. and I bring in a lot of premium because I like to go in a couple of months down the road to bring in a lot of premium. I like to take dollars, not cents, right? And that's how you acquire. That's how I acquire companies, and that's just how, if you were to adopt this type of strategy, is one of the most conservative strategies out there, and you're going to outperform any portfolio at Goldman Sachs and at Merrill Lynch, um, at Fidelity, because um, this is one of the most conservative strategies, getting your stock through cash and cure puts. And then when the stock rips 15-20% in a day, you sell covered calls. You go out, out of the money, obviously, like QUBT, was like 25 bucks. You sell some 30s out to January, and you bring in $5-6 a share. And you're basically selling this. It's already run 25% in a day, 20%, 30% in a day. And you're saying, I'm going to go $5 out from where it is right now. Okay. And you're going to give me $5 in premium, $6 in premium for me being so kind as to sell you my stock for a fat premium. You're going to give me a lot of money. And some knucklehead out there in the world of options is so dumb and is such a gambler and is so into the juice and feeling, the adrenaline and heart's pumping and saying, yes, I'll do that. I will give you $6-7 a share on QUBT for buying it at $30 in January 2027 because it's ran 40-50% in the last week. So it obviously is going to run 100%, in the next 2 months. That's just how they think. Anyways, Double D's in the house saying savage. Double D, what it is, my friend. Let's see here. GLXY, 52-week high. GLXY. Well, Galaxy Digital, we were looking at, and this is not mine actually. This was somebody from the chat that basically put me onto this. And it was $27 at that time. And I told the person, I don't want to buy it right now because he said, why would you think about buying it at 27? I said, why don't you do a cash and cure put? It had already ran, I think, 15% or 10% that day. And I said, right now, why would you buy it at the green? Why don't you wait for a red day and do some cash and cure puts and buy it on a red day? That route. And I explained to him, on the weakness, and it showed weakness, you go in and you get paid. So when the stock went to $23, $22 a share, I said, sell some 24s, some 25s out to January, right? And bring in a lot of premium because you were willing to buy it at 27, 28 bucks. So why wouldn't you buy it at 25 and get paid a fat premium if you are very bullish on this company, right? And you could have brought in $8-9 a share. And then guess what? Right now, those $8-9 are probably $3. So making money. You could have taken that premium right then and there, and then that premium you would have used to buy stock at market price. That's the only time that I think it makes sense to go at market price and buy outright because you've already made money right then and there through premium. And that's actually one of the things I wanted to talk to you guys about. I actually went and I bought 100 shares of Bmnr today. So yeah. My stinkers at I think 54.95 hit, and I've taken a new position, guys, on Bitmine Immersion Technologies, and I'm very happy that I did because now I have exposure. I have exposure to Ethereum, right? And these guys are the real deal. The company is being led by Tom Lee, who's one of the premier executives and portfolio managers on Wall Street right now. And the guy has been calling it since last year. And he's been saying this is the most hated V-shaped recovery in the history of the market. And the guy just keeps winning. I have differences of opinion because I am a bear by nature, but the guy gives so much data and he basically lays it out for you and he explains it. And now he's helming this company, Bmnr. And what they're doing is essentially they're trying to become an Ethereum treasury. Think MicroStrategy. If anybody follows crypto, MicroStrategy did the same thing with Bitcoin. They just hoarded Bitcoin, and they became a Bitcoin treasury. MicroStrategy. Let's see what they're called. Let's see what they're worth right now. MicroStrategy. It's MSTR, I believe, right? I don't know if this is the one. It's MSTR. It's $337 a share. Let's see here. I don't think this is the one. Maybe it is. Let's see here. Let's see here. Give me a second, guys. I think that's the one. If I'm wrong, you guys will let me know what the ticker is. But I think it's MSTR. I don't think it's this one though. I think it's MicroStrategy. Oh, it could be MSTR. Either way, so these guys, they took a chance. They said, we want to become um, a holding company and a treasury for Bitcoin, and they went from like $10, $20, $30 a share to like 300 and something a share, right? And the more that Bitcoin is worth, the more that that company is worth. That's exactly what Bmnr is trying to do. Is just they want to give people exposure to Ethereum without buying Ethereum, right? If you don't feel comfortable buying Ethereum, you don't have to. You could go and buy a couple of shares of Bmnr. But the thing is that the cash secured puts with Bmnr are so juicy, and I started a position last week with the first one. I think I got $10.10 for a $55 cash secured put when it went down a couple of percentage points, and then it went up to like $63 a share or something. And then I was like, damn, I should have bought more, or I should have gone and done, a few more positions so that I could have then used that premium to buy shares. And I was over the weekend just, like, damn, why didn't I do that? Today was the opportunity. They actually, before market opened, they said that they're going to raise funds, and they did a stock offering, right? And then people, for some reason, have a very hard time understanding what these stock offerings are, and they're saying it's diluting. Uh, it's diluting the company, and it's creating all these shares and blah blah blah. And sometimes it depends. You have to look at the contract. You have to look at what they're doing and how they're raising funds. But what this company is doing, right? Bmnr is it's basically selling shares at $70 in the future. So they're basically saying we're willing to sell you our stock for $70. It's a covered call. God damn it. They're selling covered calls. That's what they're taking a 14% premium. So they're taking like a ridiculous amount of money and raising, hundreds of millions of dollars in cash so they can buy more Ethereum, right? That's the whole point. They want to own 5% or more of Ethereum so they can become a treasury. And there's a lot of money involved here. All the smart money is going into that right now. I think Kathy Woods is a big proponent and a big investor. There's some other big hitters, but I mean, that's the type of people that are going in, and they're not putting $2, $3, $100, $1 million into it. They're putting hundreds of millions of dollars into this, right? So that's what the Tom Lee decided to do. He's saying, I'm gonna sell some $70 covered calls on uh on BMNR, and I'm give me 14% premium right now. The stock's at 60 something, right? And he's selling it at 70. What is wrong with that? And he's acquiring more right now. And it just tanked. The Ethereum actually went down today. So he was able to buy it at cheap. And guess what? BMNR went down today, right? And what did I do? Flags went off, and that's exactly why I was so busy in the morning. And I was like, shit, because all these companies that I'm very interested in are like way down 15-20%. I'm like, this is a fucking dream. Are you kidding me? Obviously, it has to happen on the day that I have an appointment and a doctor, and my son has an appointment, and we have to go to another city. It's just a shell of the things that happen. And then my mother's on the phone trying to ask me what's going on, because it's her grandson, and she loves, obviously grandmas love their kids, right? So they calling me, and then my wife is letting me know what's going on, and did you forget to do this and that, and I'm just and I'm trying to trade, and it's just a lot. But anyway, so the opportunity was there, and I said, you know what? How about I put my money where my mouth is? And I told you guys yesterday on yesterday's show, this is exactly what I was going to do. I was going to sell 5 or 6 cash secure puts on Bmnr. I was going to take that premium, and then that premium I was going to buy shares. And I bought 100 shares with all the premium that I generated today at market price. I put them on stink bids. I put buy 100 shares at 54.95, and they triggered. It actually went lower than that. I think it may be lower than that right now. But that was my actually it's 55.89, so I'm up almost $1 per share. That's almost $100. Look at that. And so here's the position, guys. I don't know if you guys can see, but we got our first 100 shares. Let's see here. I don't know if you guys can see that, but we got our first 100 shares of Bmnr. Let's see here. So we got our first 100 shares, and I did it through cash secure puts, and it's $55 cash secure puts that are going to expire in November on Bmnr. So guess what? Worst case scenario, I get put those shares, and plus these shares, I have 600 shares of Bmnr. Best case scenario, and this is kind of something that's more likely, is in November, mid-November, I get 5,500 times 6 back, right? So that's 2,750, somewhere on there. Math. I can't do math today, guys, because did I tell you guys there was an earthquake? There was an earthquake like at 3 in the morning. So I was already up for like an hour before that, just getting stuff ready in case there was another earthquake. So it was it was interesting. $33,000. So yeah, I'm gonna get back my $33,000 on November, and now I have 100 shares of Bmnr for free. So I either get 700 shares of Bmnr in November, or I will have 100, and I will have my money back. So free money. Like, what is wrong with that? There's absolutely nothing wrong with that at all, man. Double D saying Savage always be writing. He said something, and it says message retracted. I don't know what that means, but I'm sure he's doing well. Probably saying what's up. Mr. Premium saying whatever happened to Birdie. I hope the dude is okay. Birdie's making millions of dollars, my friend. Birdie, he put his money where his mouth was, and he was really a Tesla bull. I think when Tesla went to like 110, 120 a share, he took out a loan against his houses. And I think he told his mom and his brother to do the same thing. And they all took out HELOCs against the value of the houses. And I think they raised a couple of $1 million, maybe $1 million and change. And they bought Tesla. And then when it ran to like 150, he sold some covered calls, some 170s, 180s. And then he kept rolling them. And then he got money. And then, Tesla went to like 300, 350, 400, and he sold more covered calls, and he got taken out, and he made money. And then he went back down to like 200 and change, and he bought more through cash secure puts and at market price. and then he made more money, and then now he's making more money. So him and his family are well. Last I heard, he was buying a lot of land and developing. He's actually developing and putting that money that he earned, which is probably millions of dollars, he's putting it to work by buying land, and I think he's developing um, somewhere. I don't know where actually, but that's the last that I actually speak to him, once every blue moon, and that's what he was working on. And I kind of I wanted him to explain to the process to me, and it was a little over my head. Um, but it sounds like he's got a plan, and he's made a good chunk of change. With not just Tesla, but I think he was holding Google and Amazon um, and he's made some really good financial decisions. So Birdie's making a lot of money. He doesn't need to be watching me right now because he's already a multimillionaire, and he's putting his money to work now. I don't think he's trading as much as before because he's now got he's got money that he's in land that he's developing. All right, so that's so anyways, Bmnr. That's what I did, my friends. Opendoor. I did tell you guys that the next number to watch out for, just because they didn't, because we ended up closing above $9. They didn't want to have all those $9 puts like close in the money, and also a lot of people got margin called this morning. Um, So this was actually something that I told you guys was going to happen. I said don't be shocked if we go back to 6. I said we could see 7, we could see 6. Don't be shocked if we go down 10, 15, 20% on Opendoor. Don't be afraid to go through cash secure puts. Right? I told you guys the $8 cash secure puts try to bring in $2. That's exactly what I said. I said go to November, and I said go to November, try to get some $2 for those cash secure puts in November, the $8 strikes. Are you too afraid to go to 8 because it's too close to the money? Go to 7. Go to 7. Today you could have gotten $145, $143 um, for the cash secure puts in the $7 land. Are you too afraid for that? Go to 6. Go to 6. Try to get $84. That's somebody got $84 today on the high. For $6 cash secure puts expiring November on Opendoor. And guess what? Tomorrow it may go bleed a little more. You may be able to get these 6 for $1. The $6 cash secure puts you may be able to get $1 for. The $7 you may be able to get $1.50, $2 for. I don't see anything wrong with that. Now, mind you, you are on the hook for those shares on that date if the stock doesn't recover. But I think it's gonna go. It's just profit taking, people getting margin called. It's going to 20. Opendoor is going to 20. Don't fear the upside, and whenever you see the stock get hit that big, um cash secure puts, my friends, if you've been trying to go into Opendoor, of course, right? If that's kind of where you'll be trying to go. If you're just trying to gamble at this point, don't do it. Right? Don't do it. Do not invest money into Opendoor that you're not willing to lose. Right? That's kind of like the number one thing. Don't invest any money you're not willing to lose. Now, if you want to mitigate risk, there's other companies you could go, my friend. Where you can go that are a lot less riskier, volatile, and if your risk tolerance is not high, right? You want to go somewhere a little more safer. And what is safer than SoFi? SoFi was down to 29.14 today. Remember, I told you guys as soon as SoFi shows some weakness, don't be afraid to do $40 cash secure puts expiring 2028. Look at this. And I said $20 should be the stinker. The stink ask you should do is $20. Let's see what happened today. January 2028. Sell a put. Let's see that. Let's see $40 cash secure puts. Somebody got $16.24 for some cash secure puts today on the high side. I assure you nobody did. It probably got to 17 and change, but nobody pulled the trigger because they thought SoFi was going to come down more. But look, if you get $16, $17, $18 for $40 cash secure puts on SoFi expiring 2028, there's nothing wrong with that. It's pretty much free money. And if you go through an ETF like Charles Schwab or Fidelity have, right, that they let you basically hold that ETF and put your money there, and then you do cash secure puts within that ETF, you get 5% every year, as long as you have your money in that ETF. And then the cash secure put money is still there. So that now you're getting 5% off of everything you have, but it's now including the cash secure put money. So if you were to do, let's say, I don't know, $17,000, SoFi, 10 cash secure puts. Uh, sorry, if you were to do, say, 10 SoFi $40 cash secure puts expiring 2028, that's $40,000, right? That's in it. That's kind of what the ETF. That's where your money is. And that ETF, I think, Charles Schwab is SVWXX or something. Um, anyways, so you're not gonna get 5% of $40,000, because if you did $40 cash secure puts, you're bringing in $17,000, right? So now you're getting 5% of not 40,000 but 57,000. And this is the beautiful thing, because you're out there already like 2 years. 1 year you're gonna get 5% of 47,000, but the next year it compounds. So you're gonna get 5% of 47,000 plus the 5% of this year. So whatever 5% is of 47,000, that's a number. Let's say 50,000, and then the next year you're gonna get 5% of 50,000. So it compounds, right? But you're not going to hold until then, because if SoFi goes to $50 a share by next year, these are going to be worth half. So you're going to be able to easily buy, these cash secure puts for $7-8. You ask for $17-18. You keep $1,000. That's $1,000 profit. In 10 of these, you made $10,000. So you take $10,000 off the table. And then you could do more cash secure puts then. Instead of doing 40s, you could do 60s, right? Always staying ahead of the stock. And if you're very bullish on a company, then you could say, I'm putting my money where my mouth is. I know this company is worth at least $100. I'm going to do some $60 cash secure puts, out to 2029. Just a thought. All right, what we got here? Charlize in the house saying, hi, Savage. My cover calls on SoFi. $15 strike to January 2026. Would you buy back? Going to cost plus $9,000. January 2026. Why don't you roll them over, man? You have to look at how much intrinsic value you have, how much extrinsic value you have. You do them. You have to do the math, right? And then you say, okay, well, like, based on this, if you don't have much extrinsic value left, you could look to roll over, and you say, you know what, instead of going to January 2026, you're at 15, so you're pretty much $15 underwater, right? Try to go to $20 cover calls expiring 2028. I mean, I don't know how many calls it is, but if you have 10 of them, right, you're going from $15,000 to $20,000. So that move is making you $5,000. The question is, do you want to wait an extra 2 years for that? It's up to you. You could kick the can down the road and go from 15 to like 16, and go from like January to like March, and on a weekday, right? When the stock comes down, see if it lets you do that, and then basically giving you time to see what the stock is going to do. And let's say for whatever reasons they do a stock offering, right? And then so if it goes to $22, $23, then those come down even more. You can then roll those 16s over to 2027, 16 to 20s, right? But instead of going to 2028, now you're in 2027, and then give yourself time and then see if the stock recovers. And if it doesn't and it stays within the 20s, then you can, at that point in 2027, I mean, and this is so far ahead, right? It's just what ifs. You could go from 20s to 50s to 25s, and kind of kick the can down the road that way, but it's all up to you. I have the same issue. I have $15 covered calls that are expiring January 2026, but my average cost on them is $8, and uh, I have to make a decision. I mean, that's why I'm writing $40 cash secure puts now, so that I can take all that cash and then deploy it elsewhere. I got, like, I think around $5 in premium for those. So I made my peace. This is one thing: when you sell a covered call, right? You have to be at peace with the strike that you choose, because what you're doing is selling the rights to your shares, right? So you got to think, at any time, at any point from when you write that contract, the next day, if you write a contract that's a year out, anybody can exercise the contract, and you have to give up your shares. That's why you have to be okay with the strike that you choose. This is why I tell you, when you write a cover call, you have to, write on days that it runs a lot, and go out a strike or two above, where you are, so that you can bring, first of all, a lot of premium, and you go out a couple of strike zones, so that, if your stock, it gets called away for whatever reasons, you're able to lessen the pain, and justify, that sale. And you have to also remember there's a reason you chose to sell, or to open that contract, right? Sell to open that contract. And then you have to basically tell yourself, do you want to roll? It's up to you. Like, either, what are you going to give up, right? You can always buy back the cover calls where they are right now, and take the loss, and then do nothing, um, and see if the stock goes to 40, and then, um, kind of hope and dream that things go positively, right? But then basically what you're doing is you're at the hope, and you're basically at the mercy of the market and the stock. And that's not, I don't like to feel like that. That's why whenever I do sell covered calls, um, I choose the strike price that I'm very comfortable letting the stock go. The whole point of the stock market, and for me to be an investor, is to make money. And I'm making money, right? So I'm not afraid of the upside or the downside, but I also have to be aware that my shares could get called away at any time, and you have to make peace with that. So that's up to you. What do you want to do? Do you want to roll these to 20s in 2028, and you want to wait that long before you see that money? Or are you going to make peace with it and say, you know what? Um, I'm going to get my shares called away on in January, and then I'm going to use that money to go through cash secure puts on SoFi, and add, to my portfolio whenever there's weakness in SoFi. Go through cash secure puts, and you don't have to own the stock, right? And you could be just sitting on the pile of cash. But it's up to you. Like, it's your portfolio. You're the one that's got to make that decision. You know. Robert Landa saying, isn't strange that Taylor announced her tour at AMC on Friday, October the 3rd, the same day that GME releases warrants. That's very interesting. Andres de la Torre is saying here, hi everyone. What up, Andres? How you doing? So yeah, my friends, tomorrow market's gonna open, and it's I say look for more of the same. You're gonna look for more of the same. It's going to be a mixed bag. Don't be uh don't be afraid of the upside, right? Don't be afraid to see um your stock run 15-10%. Sell some covered calls, and get paid to own the stock. Remember, you're the portfolio manager, right? You're the manager. um your portfolio is your building. It's a building, and you're in the stocks are the tenants, so they have to pay rent. Now, every once in a while, you're going to have a SoFi or a Palantir that gets away from you, right? But 90% of the time, it's going to be, stocks that are always kind of like within margin, right? And they don't take like these wild swings all the time. And when they do take a little wild swing, you're going to capitalize by selling covered calls and taking money off the table, right? And just keep going up, with the staying ahead of the stock with the covered calls. And whenever there's, like, weakness, you go through cash secure puts and add that, that way, and never sell let's say, for example, you have 1,000 shares of SoFi. I would not sell, 10 contracts. Like I would sell six. I would sell five or six because, again, the stock can run, right? So that way, if it runs, you're not beholden to like losing all your stock in covered calls, so to speak, right? And if the stock went to like 100, like Palantir did, right? You're like, oh, okay, I'm gonna sell 300 shares and take $30,000 off the top. Great, happy birthday to me. I bought it when it was $8. It's 100, and now I'm gonna leave 100. Just till whenever, till the cows come home. See if it goes to 200, and then I'll sell them then. But that's at that point is house money because you bought them through covered calls. So that's kind of how you skin that cat, my friends. Charlie saying I appreciate your thoughts. No problem. Anytime, man. Just anytime. Um, let's see here. So Opendoor. Don't be afraid to go in through cash secure puts. $8 cash secure puts expire in November. $7. Even the $6 cash secure puts expiring in November. Don't be afraid to go in if you've been looking at Opendoor, right? If you want to mitigate risks, well, then I say you stick to stocks that are less volatile and not as expensive, right? Look at RXRX, for example, right? Um, uh, RXRX is Recursion Pharmaceuticals. Very great company, very well ran, not that many shares in existence, and it's heavily shorted. The stock can pop at any minute. They have some really good clients, some of them which include I think GlaxoSmithKline, Genentech, and Bayer. The stock is sitting at $5 a share right now. $5 a share, and you don't have to buy it right now. You can wait for some weakness. If it shows a little weakness, right? If stock goes down 3, 5%, 10% in a day, go through a cash secure put. Go to January 2026, and actually you can go to December. Go to December, uh, and the $5 cash secure puts can give you $1 right now. So you're basically getting 20% back of your return in investment right off the bat. You do 10 of these, right? You bring in $1,000, $1,000, and guess what? You could then buy with $1,000 200 shares of RXRX. So January, let's say for example, RXRX is at $6. You get your collateral back, your $5,000, but guess what? You have 200 shares to show for. And now you could do cash secure puts. You could do $6, $7 cash secure puts out to March or April and bring in more premium. Or you could just pivot, go elsewhere. Now you have 200 shares of RXRX, and you could just wait for the stock to get to like $8, $9, and then sell $10 covered calls out a couple of months, bring in $1 or $2 of premium, and then go that route. If for whatever reasons you get taken out at $10, oh well, you bought the stock at 5, really 4 because you got $1 for the cash secure put. So you bought at 4 and you sold at 10. You made $600. But remember, you got premium for that covered call. Let's say $1.50. So you realistically are selling at $11.50. That's a $750 win. I don't know what planet you are on, but that's a win in any country in in the world here. You bring in like you basically brought in over 100%. That's a home run, my friends. That's how you do this. That's how you play this game. Um, let's see here, my friends. Um, I told you guys. I told you guys, Webull, man. Webull is the real deal. Webull will be $20 a share. Webull was sitting at around 12.50 last week, and I was telling you guys the 12.50 cash secure puts are not a terrible deal. If you really want the shares, you could go and sell some $15 cash secure puts expiring January, and they would have brought you in like 350. Those are worth a lot less now, and the stock is still within in the money. What is wrong with that? You're getting paid to buy a stock that's going to be a lot more expensive later on, right? There's nothing wrong with that, my friends. Nothing wrong with that at all. Let's see here. The trading desk showed some life today. Um, Sentinel 1. Sentinel 1. I told you guys last week, Sentinel 1 was around 1775, 1780. I was telling you guys, sell some $18 cash secure puts out to like November or December. Bring in some money. Sell some $18. If you really are bullish on it, sell some $20 cash secure puts expiring January. Bring in some dough. Look at that. Since last week, it's up 5.4%. Okay. It was 1790, 1775 at a point last week. Right now is 1932. If you would have brought in, if you would have bought 1,000 shares, you would have made a couple of $100 already. It's that simple, my friends. You just gotta have conviction. Just gotta have conviction. NVTS, Navitas, Navitas Semiconductor is showing a little life. I told you guys $6 cash secure puts expiring, I think November or December. Great addition. You really bullish on it? You could have done $8 cash secure puts expiring December. They were giving you over 250, I think, last week. Right now, those are $2. So I mean, UiPath. I was pounding the table on UiPath when the PATH is the ticker. Um, I was pounding the table, I think a month ago when UiPath went down to like $10 a share. It's now $13.30. I told you guys some $11 or $12 cash secure puts expiring in December, January were not a terrible deal. And right now the stock is up like 20-25% since then. What is wrong with that? Figma. Figma, $50 cash secure puts, $50, $55 cash secure puts expiring in December. You would have brought in, I think, at some point, I think in the last $8, $10. Those are a lot cheaper now. Because the stock is recovering. Um, QBTS, we already know. QBTS was like $18. I was saying $18 cash secure puts out to, I think, January. We're bringing you in like 550. Those are a lot less now because the stock now is at 25.15. The stock was at 18. Now it's at 25.15. I mean, it's all here, my friends. It's all on video. You don't have to believe me. IonQ was $13 when I was telling people you should look at IonQ. It's $72 now. I was telling people about Palantir when it was $8 a share, $10 a share, $20 a share. I was pounding the table for some $20 cash secure puts and buying the stock with that premium. I was telling people about SoFi when it was $8, $10. I was telling about people Nvda was $90 in April. And I was pounding the table. I was like $90, $100 cash secure puts, and then use that money to buy the stock right now. Not a terrible deal. It's all there, my friends. DNA is showing life, and it's up 5.72%. Today, I decided to sell some December 19 covered calls. I sold some $14 covered calls. Sorry, I did not sell $14 covered calls. I believe I sold $15 covered calls, and I brought in $115. What is wrong with that? I bought the stock at through cash secure puts. I basically bought it at $9, and I'm gonna sell at 15. Nothing wrong with that, my friends. And I'm getting paid $115 to sell it at 15. What is wrong with that? Nothing at all. All right, what do we got? Charlie saying, I appreciate your thoughts on the problem, Charlie. Susan Shop saying, hi, everyone. Susan, how you doing? Charlie C2 saying, what's up? Dude Face saying, I'm listening to the pounding on the table. Thanks, Savage. I'm listening to the pounding on the table for sure, says Dude. Mike Edward was all saying, hi, thanks for all the info, Savage. No problem, my friend. What are friends for? Let's see here. What is another one that I told you guys about? I think Schrodinger, which is SDGR. Potential 10x is 1997 right now. Sell some $20 cash your puts expiring January. You will not regret it. I don't think. Ethereum is almost at 3,500. It needs to come to 3,500. Guys, if Ethereum goes to 3,500, I'm buying one. I'm buying one Ethereum. Oh man, it's already dark. Let there be light. Uh, hey man, what do you guys think? I think I have to have some logos of the Savage 20 down here. I think I need to get new lights, maybe a nicer camera. I got a little cheapy camera here. So I'm thinking I have ideas, man. So I'm just glad you guys are making money. I'll tell you right now. So where did you guys make money today? I do know you guys told me about some cover calls. You guys sold. Some people sold SoFi. I think some people sold some QBTS. Um, yeah, no, it's all good. Savage, sorry if you mentioned it previously, but I missed it if you did. Any thoughts on Resolve, RZLV? Let's see here. I've seen the ticker. I've seen the ticker. AI Limited, Resolve, 635 a share. It's down around 10% today. If you're bullish on that stock, if you've been looking at it and you were like, you know what, I'd be looking at this stock. Let's see. 52-week high is 945. 52-week low is 106. So $6, it's kind of in the middle almost, right? So it wouldn't have been a bad day to go through a cash secure put expiring January, and the $2 cash secure put, $6 cash secure put would have brought you $2. That's 33% return on investment. If you're really bullish on this company, um, $6 cash secure put brings you $2. I see nothing wrong with that if it's a company you've been looking at. What do I think about it? Um, Resolve AI PLC operates in the mobile commerce industry with its cutting edge engagement platform powered by artificial intelligence and machine learning. It develops AI based mobile commerce and engagement solutions, simplifying the purchasing process by providing relevant information and facilitating seamless transactions with a single tap. Now, who's the direct competitor? That's the one thing that I would look at, right? Who's the direct competitor? Are they making money? What have their last 3 or 4 quarterly earnings look like? Who's their CEO? Where did he come from? Um, are they in like some really big debt? Is there any type of shenanigans that this company has done in the past? Have they cooked the books? Um, is this company a company that you see yourself holding for the next 5 years? They're based out of London. I know that in England, you gotta be pretty legit when it comes to businesses. There's a lot of safeguards, But I'll be honest with you, I don't know much about this company. I see that they've had some good quarter earnings. They have some bad ones. The last one was not great, and the one before was okay, but the one before that was not good. Um, I see the customers have been selling this at an increase of 12% versus the last trading day. Why did that happen? You know, those are things you got to take into account, my friend. Those are things you got to take into account. You have to look at, um, what I just told you. Look at their fundamentals. What is the end game? Like, what are they trying to achieve, and who the direct competitor is, right? Um, and look at the opportunity. I mean, it went down almost 10% today. Today would have been a great day for cash secure puts if it's a company you'll be looking at. And I'll tell you this. $400 is a lot more palatable to lose than 600. So I would have gone through a $6 cash secure put expiring in January. You try to ask for $2 and get $200. And then you're in the game. And worst case scenario, you lose $400. But if it's a good company you've been looking at and you've been looking at for a few months, and you're like, I think I want to get into this because I like the way that they're doing business. Their board is made up of some really good people. I see a future that this company uh, is going to positively affect. right? And you see yourself holding the stock for a few years, nothing wrong with you going through a cash secure put. Worst case scenario, you get your 600, you get the shares, right? Worst case scenario, let's say, you get the shares in January. Best case scenario, you get your $600 back and you made 33% out of that 600 in like 3 months. I don't see a problem. 4 months, 33% return. You do three of those in a year, that's 99% returns. What? What? What is wrong with that? You just you get 99% of your money back within the year on any investment. You're a fucking rock star. If you invest $1 million and next year you have 2 million, you are a fucking rock star, my friend. That's the way you have to look at it. So it's your decision, you know. How about we look at it? How about I put it in my list to what ifs, my what ifs list, right? And then we'll go back to it once in a while. I'll have it now here, so I don't have to go and look through, putting that ticker in and all that stuff. So anyhow, bullish BLSH, it's $67 now. Bullish was just down to like $49 a share, $48. I sold some cash secure puts, brought in a lot of money, used that money to buy some shares. Now it's up to 67.90. Thank you very much. May I have another? Um, let's see here. Red Cat was down last week, and it was like I think in the $9 land. And I was telling people, if you're bullish on Red Cat, $10 cash secure puts out to November, December. Not a terrible way to get into the stock. Um, let's see here. Lululemon. I was talking about this week. Lululemon is very interesting because it's almost at a 52-week low, and they just inked a contract with American Express. Um, so I think people that hold specific credit cards are going to get like a credit, so they can shop at Lululemon, and this is a quarterly credit. So what does that tell me? That tells me that they're getting people in the door that way. If somebody tells you they're going to give you $100, $75 every 3 months, and you have to go and shop at this place just to get that, it's basically a free item or two, right? That's how they get you in the door. Great, you're gonna go and you're already there. You're like, look at other stuff, and you're like, oh my god, that's pretty. Oh, that's cool. You know, um, they have some really very comfortable pants at Lululemon, in the men's department. They're the ABC pants. They're the anti-ball crushing, and they're extremely comfortable, my friends. Let's just say that. My wife likes how comfortable their tights are and stuff. So, um, there's a market. There's a market, and so I was looking to get into it today, but just too much happened, and it's already up. I think it was to 165 at a point, and it's 173. So I'm gonna see if it shows any more weakness within the month. If it gets down to like 150s, I'm gonna probably go in and see. It's a lot of money though, and it's apparel. Um, it's one of those that we're gonna have to look at. We're gonna have to look at. We're gonna have to keep an eye on Lululemon, my friends. If it gets down to the 150, 140 area, a cash secure put may be the way that we go in. We'll see. But Bmnr definitely on the radar now. It's up 50 cents or almost 1% in the after hours. I'm very bullish on Bmnr just because of Tom Lee is the person that's helming, and I want to share this with you guys. Um, let's see here. Let me share this with you guys, cause don't worry, I'm still here, guys. I'm still here. It just there's a little like a 1 or 2 second lag, but anyhow, um, let's see here. These are my bullish arguments based on the fundraising that Bmnr did today. Expansion of Ethereum treasury. Bmnr raises capital to buy more Ethereum, rapidly growing its holdings. A recent 365 million stock sale will be used to expand the company's Ethereum treasury. They're trying to earn 5%. They're trying to own 5%, right? This expansion strategy is creative, is accretive, is a credit to existing shareholders, especially when the stock is trading at a premium to its net asset value, right? I think the NAV is like 61, and now it's actually lower than that. But premium pricing validates the strategy. The fact that Bmnr was able to raise capital by selling shares at a premium to its last closing price indicates a strong institutional confidence in the company's Ethereum treasury strategy. These premiums suggest investors believe the company's Ethereum accumulation and management adds value beyond just holding the tokens directly. Ambition for market dominance. BMNR, led by prominent market strategist Tom Lee, has an ambitious goal of accumulating 5% of total Ethereum supply. Continued capital raises are essential for funding this objective and could lead to significant shareholder returns if successful. Some studies, right, and some exercises have actually had a BMNR 10xing to $600 a share by next year. Of course, this is obviously just what ifs, right? We don't know what's going to happen, but if all these things happen, right, and Tom Lee's actually a very good at predicting this shit, and this is one of the reasons I'm bullish on it. And I decided to go in because he's the person that's really leading the charge at BMNR, and he has a lot of pull, right? I think that if the stock hits 150, $200 a share by like March, don't be surprised. And that's why I had to go through cash secure puts because the premiums were so juicy today. I ended up selling some $11 and 11.15 cash secure puts, and I did some 1080 cash secure puts for $55 strikes in November, and I brought in that cash with cash that I brought in last week, and then I just I had obviously reserves from other premiums anyway, so I ended up going at market price. I want to buy 100 shares at 54.91, and it triggered because it actually went lower than that, and I'm happy. I have 100 shares, like I said, and if we go to $600 a share, I'm going to open up a bottle of champagne like here on the show, and you guys will see me drink it. Um, I don't know if that's kosher, but I'm going to drink. So if SoFi hits $100 a share, I will do the same thing, and I will be here drinking friggin' champagne bottle as we you know uh pop balloons and pop bottles and all that stuff because that's a big deal, man. For like a small YouTuber like me, right? And I don't have billions and millions of dollars that I'm investing, so like whenever we hit a milestone like that, it's a big deal, and I know that it's like I'll be celebrating with you guys because I know some people out there, you know that are watching me, they have they own BMNR, and you guys own QBTS, and you guys own SoFi, and you guys own Unity, and you guys own you know QBTS and QUBT, and you guys own RXRX, um, you guys own Webull, and so that's a big deal, right? Like it basically shows me that people are making money. I'm making money. I know you guys are making money. And that shit is lovely to me, man. Let's see here. Uh, Susan Shop says, I heard it. If another SPAC symbol, HOND, is going to merge with a company called Terra something, $1 billion nuclear AI company that UT Zip Trader talked about. Big write up, maybe good luck. Good look at it. Okay, HOND, let's see. Let's check it out. Um, what is it? HOND? HCM2 Acquisition Corp. SPAC. Well, we know what. Let's just say that Wall Street doesn't like SPACs, guys. You guys know that, right? You guys know what they did to SoFi. They're gonna choke it to the ground, and they're gonna punch them in the face until they can't punch anymore, and then they're gonna gorge on all the shares, and then once they feel like it, they'll let it go, and they just like they did to SoFi, they just choked it till it had no more oxygen, and they weed out all the all of us, right, the retail investors, and then once they figured that okay, fine, we've had our share, we got enough, we'll let it go, and then SoFi goes to 30. That's what happened. So we'll look at it. Mando number 5 in the house saying hi. You all do the same. Rolled my MSCR cover, closed out a week to took $2,000. My friend, good for you. MSTR, good for you. That's how you do it, my friends. You he he rolled his cover, closed out a week, and he made $2,000. So you're talking about $8,000 a month potentially, right? Do you understand? We're talking about $96,000 a year on one fucking trade, just one holding. That's crazy. You could do that here, guys. You could do that here. And I hope those people, anybody that's watching me that's brand new, I hope you keep coming back because we got some goodies. We have some really good people watching us. We go through like a really good and conservative strategy. We're not trying to blow up anyone's portfolios. We're not doing that. That's not what we're doing. We're not fucking YOLOing. We don't do that. If you want a get rich quick scheme, I am not your guy. There's other people out there. I'm not gonna sell you, my courses. I don't have any. We are here just legitimately, uh, good people is trying to make money, and I have some expertise. I used to work at a company called Dodge and Cox in San Francisco. It's a money management firm, as and I did a lot of research. That's kind of what my main thing was, So I just happen to have a really good nose for finding really good undervalued stock that's been hit, and then I buy it low, and I write it up high, sell cover calls, and make money. That's it. That's the name of the game. Um, Good for you, dude. I love it. Charlie C2 saying heard that one also tonight from Zip Trader. Charlie C2 HOND looks interesting. Susan saying Charlie C2. I looked at briefly, think price 52-week low at 9 and high is 13.95 tonight, all time high. Or after hours is up 8% to 15. SPACs we have experience in, wondering if it will go down before it goes up. Chances are. Bullish on Bmnr as well, says Charlie C2. Anything to do with Bitcoin or Ethereum is going up. You see this administration in general. Yeah, no, this administration likes their crypto because the president has his own crypto. Andres de la Torre saying, Sav, I'll share some champagne with you. That's what's up. I'm looking forward to it, my friend. I've been adding a Bmnr weekly. Good for you. I just took I took a position last week, right? And then the more I'm reading about it, the more that I'm looking into it, the more that I'm seeing that going in through a cash secure put, a few of them bringing in that premium and then adding, especially on today when it was weak, because they did this offering. People don't know what they think dilution. Think cover call. That's what you need to think. That Tom Lee is basically saying to Kathy Wood and other people out there, look, I'm going to sell you my stock at $70 a share. And here's the date. Give me 14% of that. So whatever 14% of 70 is, right? Multiply that by a million shares, 2 million, 3 million, however million shares, right? Um, that's how much money he's raising. And then now he's using that money to go in and buy Ethereum on the low right now that's down. So he's adding to the treasury. And so what is that going to do when Ethereum happens to go? And I think it's likely that it's going to hit $10,000 a share in the next year. This company is going to go to $110, $120 a share. Ethereum is going to go to $10,000 per coin. I mean, not a share. But anyway, that's where I see it going, man. And I'm very bullish on it myself. Um, Operational leverage through staking. Unlike passive cryptocurrency treasuries, Bmnr can generate yield on its substantial Ethereum holdings through staking. This provides a stream of income that can be used to acquire even more Ethereum, further compounding growth. Bullish arguments based on Ethereum treasury model. leveraged play on Ethereum is that as an Ethereum treasury company, Bmnr offers investors a leveraged way to bet on the appreciation of Ethereum. If Ethereum value increases, Bmnr stock could also see even a greater rise due to the strategy of buying more Ethereum with capital raises and trading at a premium to its NAV. Growing drivers for Ethereum. Bulls argue that the long-term growth story for Ethereum is strong due to its vital role in the stablecoin ecosystems and other decentralized finance. Um, Recent supportive legislation, like the Genius Act, is also seen as a positive catalyst for Ethereum and, by extension, Bmnr. Exactly. Institutional access, Bmnr provides a straightforward way for institutional investors to gain exposure to Ethereum to a traditional stock exchange, sidestepping the complexities and risks associated with holding the crypto directly. Nothing wrong with holding the crypto directly. But if you want to lessen your exposure, you can go through stock. This could fuel sustained institutional demands for BMNR's stock. Risks and counter arguments, despite these bullish points, there's significant risks, and you always have to consider risk when investing. Share dilution. The practice of raising funds by selling new stock leads to share dilution, which can put downward pressure on the stock price in the short term, as was seen on BMNR's recent 365 million offering. But this is my thing. It's not that they're creating new stock, man. Is they're literally saying you're gonna get this stock at 70. I'm selling it for $70. Are you creating more stock when you're selling covered calls? No, there's already a set amount of stock. What you're doing is you're compounding it into blocks of 100 and selling it for a premium in the future. That's essentially what you're doing. Reliance on Ethereum price. BMNR stock performance is highly correlated with the volatile price of Ethereum. A significant downturn in crypto markets would likely hit BMNR hard, and that's fine. This is exactly why we down average, right? And this is exactly why we go through cash secure puts. If you go through a cash secure put and you get $10, $11, $12, for a $55 cash secure put expiring in November, you're buying the stock at $43, $44 a share. It's at 55, 56, 57 right now. You have a really good buffer. There's no problem there. And if it, for whatever reasons, it's $40 a share, then you can then do 35s or 40s and get paid and then average down. This is how you invest, my friends. And now you're not going to have only 100 shares. Now you'll have 200, 300, 400. Imagine owning like 1,000 at an average $40 a share. $35 a share. You have 1,000, and then fucking Ethereum runs to $20,000 per coin, and then the stock goes to $600 a share, $700 a share, and you have 1,000. Fuck it, you're done. You're done. You're done. You're done. Deuces. It only takes one stock, my friends. Only takes one stock. We are holding a lot. But we're selling covered calls to mitigate risks, and we're selling covered calls so that we can bring in cash right now, so you can pay bills now, so you can pay the fucking mortgage. You make $10,000 you killed in the stock market. You made $10,000. Guess what you're gonna do now? Instead of if you don't want to go because you're like, I'm gonna take money off the table. Guess what you could do? You could take $10,000 out of your portfolio, right, out of your brokerage, and then you can put that down towards the principal of your house. You just made it real. And then guess what? Then you just lessen the amount that you're going to pay, per year now, right? Maybe even monthly. And in the back end, you're going to have to pay now with 2 less years. Instead of a 30-year mortgage, now you have looking at 28, because you just cut down all these fucking payments, right? What the fuck is wrong with that? What? You cash secure puts in premium. You made a killing, covered calls, and now you made it real. You just made your life way easier in the future and now. That's a lot of pressure, a lot of stress that comes off of you. Premium compression. The stock's valuation includes a premium over its NAV based on its assets. The premium could compress if its institutional demand wanes or if market sentiments turn negative, resulting in a decline in the stock's value, even if Ethereum remains stable. Well, this is something that you have to take into account, that, if the fucking market crashes, everything is coming down, guys. Like, at that point, Ethereum is not going to be your problem. It's not going to be your only problem. Let's just say that. It's going to be all over the place. There's going to be contagion everywhere. Everyone's going to jump ship everywhere. People are going to sell. We're going to have a contraction of 20, 30% in the markets overall. And guess what? You're holding cash. And you went into cash your puts. You're going to get your stocks at a cheaper price, right? And you're going to average down. You're going to hold more stock. And whenever the stock market recovers, and it will recover, because the stock market is the only fucking device on God's green earth that is designed to go up. It is designed to go up. Billionaires don't want to lose money. Multimillionaires don't want to lose money. They want to make more fucking money. Okay? And they pay a lot of money to politicians, whether we want to accept it or not. They pay a lot of money to politicians so that they can keep it so. And these politicians put their money there as well. You think the politicians that have been in there for 20, 30 years want their portfolios fucked with? No, absolutely not. Anyways, guys, I'm gonna get out of here. It's been over an hour, 30 minutes, and I said I was gonna go for 30 minutes, 35 minutes. It's been over. Thank you for watching. I'm going live tomorrow at like 8 a.m. right? 11 a.m. East Coast, 8 a.m. West Coast time. I'm the Savage of Wall Street, you knuckleheads. Thank you for watching. I appreciate you guys very, very much. Let's see. Excellent move by ASST buying SMLR. Yes, ASST. ASST. Dude, I'm not doing anything. I'm waiting. I'm just waiting. I'm just waiting for October. I definitely see ASST being around $4 to $5 a share that day. And if I get my money back, great. If not, I'm gonna get the stock, and we'll see what I'll do then. But I'm thinking about maybe getting my original investment back and then letting the rest ride. Either way, I'm happy because it's staying within. As long as it stays under or over $1.55, I'm good. So it's at $4 and change, right? I don't mind. Um, my fellow simpletons and degenerates, thank you so much for watching. I appreciate you guys very much. Have a good evening. It is I, the Savage of Wall Street, over and out. See you guys tomorrow. Have a great night. Peace.